Loading for the future. That's how our next guest describes one of the takeaways from this morning's General Electric earnings report. Joining me now with more is Nicholas Heymann. He is the Director of Global Industrial Infrastructure at Sterne Agee Leach. Nick, welcome back to Bloomberg. Always good to have you on.
Hey, Mark. Good to see you.
You just heard Adam Johnson's report there. GE with some sterling numbers again, but as he mentioned, the stock up today, but still way down from 2007. Give us some historical context.
Well, you know, it's been obviously a precipitous challenge during the financial downturn, predicated on the weakness at their financial service business, which hit some rough patches in terms of liquidity. They're well through that, and that, in fact, has been such a strong factor for the recovery in 2010 that it began to concern folks that perhaps the industrial wasn't going to come alive. And obviously, there's a better multiple assigned to the industrial portion of GE's business than the financial services. Now, industrial is starting to show some signs of life, both in revenue and particularly in orders.
And we did see, equipment orders up 20%, services up 5%. What do these numbers mean going forward?
Well, it means that certainly, the long-awaited recovery in the late cycle side of GE's business is starting to emerge. And that, is very encouraging, as I mentioned, to investors, because certainly it's been later than competitors like Siemens or even ABB that have seen their power business pick up more recently. And now it's finally starting to might find its way back to GE.
You were talking about capital services just a minute ago. When does GE increase its dividend? Does it all hinge on the performance of capital services and how quickly it recovers?
You're looking to basically take and eliminate the last losses, which are over at commercial real estate. And they indicated today that they should be able to end 2011 with no losses there. For the year, there'll be a loss. But that is key, Mark, because you'll be then able to get basically concurrence from the rating agencies and your lenders, as well as the board, to restart the dividend from the financial subsidiary to the parent. Historically, that was 45% of the net income of the financial sub. And now it's been suspended as you try to amalgamate and build out your capital base over at the financial. But when that is turned back on, you'll be able to have more capital for the parent to lift the dividend again significantly at the end of 2011.
Okay, Nick, but then when will earnings per share be the principal driver here? When are we going to see that?
Good question. We right now think that near term this is driven by yield, and hence the probable opportunity to lift the dividend another 50% by the end of 2011, payable in 12. We think it's probably 13 or thereabouts before you get a similar type of valuation on a PE basis for the earnings to be able to support, say, a mid-20s type stock price.
Why are some GE investors enthusiastic and others frustrated? What do they want from Jeff Immelt?
Well, this has been a fairly bumpy ride, I guess that would be the best way to say it. And, there's a lot of moving parts. This quarter, of course, they did not close in NBC, and that'll be closed this quarter here in the first quarter of 2011. And with so many parts, moving and so many variables, when rates start to move up, there obviously will be a concern that the spreads on GE's portfolio, which have been widening steadily due to this very low interest rate environment we're in, that obviously could slow, the improvement over at GE Capital. So there's a lot of different moving parts here. It's definitely moving the right way.
How has GE benefited from the Obama administration's recent diplomatic and trade efforts regarding China? We saw President Hu here this week saying at that joint press conference that he wants the U.S. and China to be partners.
I think they've benefited a lot. If you look at where the orders came from that were so impressive in the infrastructure, up 20% in the fourth quarter, India, Russia, and China were the principal sources, as well as in the Middle East, that, basically all overseas, that were really helping to drive that backlog. And so I think that certainly Jeff's new position will only be a help for his ability to be able to further stimulate and secure GE's orders overseas.
Are we talking, at least for GE right now, under Mr. Immelts' guidance, they're going to start maybe looking forward more towards clean energy?
That's certainly one of the markets that's out there, that, carbon sequestration, that they're certainly focused on. One of the things that they're very much eagerly anticipating, which won't be here at 11, but start to help in 2012, is the idea that we're going to take and convert a fair number of coal, or even retrofit coal power plants to gas turbines. And obviously GE is the leader worldwide.
How significant is that? I don't think that's talked about enough. That is a very significant development.
It is, especially at a time when GE's business in gas turbines is not exclusively but largely geared towards developed economies, and we have no significant new need for incremental power. So if you can take the existing planned additions and shift them to GE's favored, generating source, gas turbines, that's a big plus. And of course, gas prices have been quite low with the exploration of all the shale.
Sure. Jeff Immelts' new position with the Obama administration. He's still running General Electric.
Yes.
How do you do both?
It's probably not that different because he was on the committee previously, and now he's just leading it. And basically,
but now he's basically taking Paul Volcker's place.
But Paul has two different jobs, and the Council of Economic Advisors, as it was formerly referenced, is basically designed around how to improve our export capability and increase jobs and drive innovation across the manufacturing and industrial sector of America.
And that's interesting because that's one of the things that Mr. Immelts said in his op-ed in the Washington Post today. My hope is that the Council will be a sounding board for ideas and a catalyst for action on jobs and competitiveness. And he said one of the areas to focus on manufacturing and exports and a coordinated commitment among business, labor, and government. Easier said than done?
Well, certainly it's a goal to revive Americans' position as a major exporter of manufactured goods around the world. And I think that's key for jobs, which obviously is a key component to fixing the economy here. And secondly, for our balance of payments. Our imports for energy are probably going to only go up as energy prices go up. So we've got to figure out how to export more. And certainly Jeff's area of expertise certainly would be in industrial manufactured product.
But that puts you right smack in the middle of the trade imbalance. And that was one of the criticisms that folks were talking about this week when President Hu came to Washington. How do you balance the two?
Well, you work as, GE today formed a joint venture for aerospace avionics with the Chinese to try to be able to help expand the company's presence on major platforms, new aircraft that might be now built in Russia or, in China. They're working closely with expanding their participation in helping to upgrade the infrastructure for power in Russia as well as in rail.
But how does that translate to American jobs? That's the one thing that people always talk about. We hear stories about companies doing a lot of business overseas, but is that actually good for American jobs, American productivity, American GDP?
Well, we obviously have to take and make sure that we've incorporated enough value added through innovation and technology to be able to allow at least a portion of what is being produced to be originating here and in turn perhaps probably finished in the country where the products are going to be exported to. And that's something we do today with rail cars. They do kitting sometimes where they'll take and put the basic components together for a locomotive or retrofit and rebuild it and in turn reassemble it in the buying country's home factories.
This news today from General Electric and what we're seeing, the numbers that came out today, we should mention that part of this had to do with that NBC Universal Comcast deal. The NBC Universal revenue up 12%, and this week, as you know, the government did clear the way for that deal, Comcast, to take over NBC Universal. Did GE's management make a move too soon?
No, I think that that whole business is just how you distribute content via the web and wirelessly increasingly as opposed to over the air or via cable is radically changing. And it was clearly a business that's pretty far afield.
Is it radically changing for the better?
It's radically changing in an area that's probably outside the zone of excellence and expertise for GE. And ultimately, they felt that probably somebody in media, particularly somebody that had a very strong position in the cable side, distributing content already, would probably be able to create more value. They are obviously still a owner of 49% of this entity. And
we should mention that Bloomberg LP, the parent of Bloomberg Television, had filed papers opposing the merger as it's currently proposed. Because the NBC Universal sale didn't close in the fourth quarter, GE had a lower than anticipated tax rate. What does that mean?
You basically accrued during the course of the year the expectation that you would be paying a significantly higher rate in the fourth quarter on a very large $3 billion gain. That gain now will occur in the first quarter, so they had to basically reverse that prior accrual during the first 3 quarters in the fourth quarter, and that was about a 10-cent credit to GE's earnings bottom line. They offset that with additional restructuring, 6 cents worth of environmental reserves. The second phase of the cleanup of the Hudson River was about 5 cents. So they, in essence, took Mark and basically offset that one-time windfall so that the bottom line results of 36 cents was reflective of continuing operations and not, one-time events.
How's that going to affect GE's tax rate this year?
Well, it's going to be a lot higher. The estimate was that, if they were looking for 23% for the full year in 11, that it probably might be up 15 to 20%. And the first quarter will be abnormally high. Our guess is someplace in the neighborhood of 85% because you'll have this very large gain and you'll have significant taxes on it. About of a $3 billion or so gain, you'll probably pay $2.67 billion in taxes. The other component will be additional restructuring. So again, you will not have that impacting what would be otherwise our prior expectations for the first quarter.
Nick, in our last 30 seconds, GE's outlook for the rest of this year, for the next quarters coming up?
Certainly one that sees the industrial up probably somewhere in the neighborhood of 8-9%, including acquisitions. Financial services shrinking, the net earning investment there, and so you're probably going to see revenues there down 3-4%, and overall revenues relatively flat. Your margins will be flat. Okay, you won't have the positive spread with regards to lower material costs that you did in 2010. Material costs are up, so margins will be flat. So you're really going to be looking at incremental improvement, probably closer to 10 to 15% here in 2011.
All right, Nick Heymann, Sterne Agee, joining us here on set. Good to see you.
Good to see you. Thanks a lot, Mark.
Thank you.